Welcome to this second edition of the Private Debt Forum. We are very happy to have you here. This event is, of course, organized by Natixis CIB. And thank you very much for joining us today in this beautiful venue. Well, you came with the King Charles, so I think you are at the right place. And thank you for being. It's the best place to be, by the way. We should have King Charles with us today. So thank you very much again for being with us. I'm Cristina Balanos, and I'm delighted to present this event. We have a very exciting program, and along with great speakers from leading investors in the private debt market joining us. And to introduce this event, please welcome to our first guest who will introduce that, the global head of Natixis Corporate Investment Banking, Mohamed Kallala.
Thank you, Christina. I heard that the King Charles complained about the traffic generated by the private debt forum.
So, as I said, it's the best place to be, actually. Mohamed, I have a couple of questions to introduce this event. Private debt is obviously a wide scope, and it varies from organization to organization. So what does private debt cover, and why is it so important for Natixis CIB?
First, thank you, Christina. Thank you all for being with us today. Private debt, actually, it covers almost everything, if we keep aside equity. And Natixis, the CIB of the group BPCE, and BPCE, the fourth European bank, 75 billion core equity Tier 1, is a bank with a debt DNA. It goes from retail, different asset classes of debt of retail, of course, to corporate, and then to real asset, infra, real estate, aviation. So the debt is everything within the group BPCE. The senior management is familiar with this asset class, all kind of debt. The senior, the meds, the trenches of CLO. The senior management of the group is really coming from this business and are familiar with this. So that's why I think we've been able to navigate faster among the different changes that we faced over the last decade. And private debt, for me, it used to be the flavor of the month. It will continue to be the flavor of the month because the final investor are asking for this. Of course, time to time, they need they expect to be paid back from their former investment to invest in the new funds. But at the end of the day, for me, private debt gonna be one of the major asset class for the final investors. So that's why private debt is within the DNA of our group, because we believe that it's strategic, and second, it's our DNA.
As you know, as everybody knows, it's the second edition of the Private Debt Forum. So could you tell us what is the difference between last year and now?
Look at the newspapers. There's more headlines talking about private debt everywhere. It used to be the case in the US, but now it's everywhere. It's in Europe, more than London. It's in the continental Europe as well. So private debt is in the middle of all discussion, the heart of all discussion of strategies of investor, banks, brokers, asset managers. So it's a real new asset class. It's not new, but it's an amazing, it's showing an amazing growth. Second topic, the private debt is mature enough, big enough to be able to replace almost all banks and time to time the markets. So it's a real option for all kind of deal, whatever the size is. I saw 16 billion, 12 billion. So and especially, and this is one of the driver why private debt is again on the head of the scene, that the crisis we faced last year, increase in interest rate, dramatic change in the volatility of the spreads, to what extent the different committees of different banks are not that comfortable to underwrite new situation, and that's why the private debt is was able to replace in some transaction when it makes sense, when it's highly profitable, to replace the other actor that were financing the economy. So that's why this edition is just showing that we still have few editions to organize next year and the year after. We are just seeing this asset class taking its place.
You just mentioned earlier that it's part of the DNA of Natixis CIB, so I'll ask you a more direct question. What are the achievements of Natixis CIB in terms of private debt?
You know the group. Actually, the achievement should be mentioned by our client and by you, our partners. I think that the fact, again, that the credit debt is within the DNA of the group. As I mentioned earlier, we've been able to immediately build partnership and trust between our partners and our client and the group. Actually, 10 years ago, 11 years ago actually, we said that we're going to originate because we know the client. We know many clients. We understand their business model. We understand the risk. We understand what they want to do, buying other company, investing massively, and we are happy keeping a portion of this debt. So we said to our partner, we're going to originate, we're going to underwrite, we're going to make the deal happen on the origination side. We're going to distribute it, but we're going to distribute it in the Natixis way, which means we keep a portion of it, and we continue to be aligned with you. This was I think, the big difference between an American bank and Natixis, which is the bank that is in between. We are not European, we are not taking hold on our balance sheet. We are not a US bank. We are not selling 100% of our underwriting. We are in the middle, meaning that keeping a significant portion on our balance sheet. This really makes the real difference between our business model and the US or the other European banks. But actually, the achievements, when you look at the figures, it becomes more and more a significant part of our NBI. When you look at the ranking, either real estate or infra or aviation, or in the middle class in the corporate debt in the US, we have a ranking that are among the top 5, let's say this way, which is totally different from the size of the CIB when you compare to our ranking as a CIB. Within the debt, we are in the top 5 almost everywhere.
Next question, as the market is strengthening, obviously competition is also growing bigger. According to you, how Natixis CIB differentiates itself in its approach to private debt? And I would go even beyond another question. Where do you see the market going in 2024?
It's a very interesting question because I think the competition, we always face a huge competition between banks. We, over the last 5 years, saw big competition between banks trying to establish partnership and being really servicing the private debt funds. Now I think that even if I think that the asset under management for the private debt will definitely grow a double digit and even more than double in the coming 5 years, we're going to have a competition between the different private debt. For one simple reason, is that it's really difficult today to raise new funds for 2 technical reasons. The first one is over the last 2 years, and because of the sharp increase in interest rate, the value of the listed asset decreased, let's 15 to 20%, and the final investor, the LPs, are seeing their listed portfolio decreasing and the private portion of their portfolio increasing in terms of allocation, so they're expecting to have a more balanced portfolio in order to increase their allocation to the private sector, equity and debt. This creates a competition between the different private debt funds in raising new money. So this will create the competition. The competition we always have a competition between banks, that's for sure, but we start to see competition between private debt funds in raising money. And that's why at Natixis, we think that we work with the best in class, and we think that we can be a partner to show that to help them navigating through this new competition, I would say, between the different asset manager of private debt funds.
And what about 2024 then?
It's going to be an amazing year. It's going to be, for private debt I'm talking, it's on the
And for
CIB business,
Natixis
it's
CIB,
different.
of course.
Yeah, it's going to be an amazing year for, actually, in the different, all asset classes, you have a driver for strong growth. Real estate, offices are going to be amazing. The market will settle in 2024, and you're going to have a huge opportunities to take the debt at a decent profitability and really low risk. In infra, the needs are doubling every year. Each year you double the needs of the government, the corporate, to comply with all the commitment they made regarding the carbon dioxide emissions. So we're going to double. So who can serve those clients? It's going to be, you're going to have the choice. So on the corporate side, with the interest rate at 5% in US dollar, with spread for B, like B plus of 4 or 500, you cannot use only market and banks. And on top of that, the ECB is putting a pressure on the European Bank to reduce their allocation to what they call highly leveraged transaction. Another driver for more need that cannot be served by the existing player. It only can be served by the private debt. So for the private debt, it's going to be an amazing year. So, but we're going to meet next year, Christina.
Oh, of course, I'm waiting for the invitation already. Thank you very much. Any final words?
There's many topics that we're going to discuss during this forum. I think that all of us, the bank, but the private debt funds and the market, will have to have a better understanding of the underlying business. So we're going to have more and more specialists when allocating the debt. It's already the case in certain banks. It's obviously the case in private debt. So you are bringing to the final investor the expertise at the relevant price, which is different from what the banks used to do before. Because actually, what is the bank? A bank is an issuer of bonds and have a portfolio of different asset classes, different maturity. No one investing in the bond of the bank is having a deep and thorough understanding of what we have in the balance sheet. Don't tell this to the financial analysts of banks, huh? But actually, the specialization of the debt fund and the bank regarding each asset class will create the driver for growth, and at the end of the day, the money coming from the LPs will be directed to the best in class that are able to show that they understand the underlying class, the underlying asset, the business model, and have the relevant partner to originate more debt. Because my understanding from the behavior of the LPs today, they are prepared to allocate more money, but to less names, to less hands. So for me, the competition and the driver will be expert, show that you are able to originate a lot of deals and have the right to pick up the best ones. And we are here to work with you and work together, to partner together for the 2023, the rest of 2023 and 2024 as well. So maybe thank you all, and see you next year.
Thank you very much. Thank you, Mohamed.